Welcome to this podcast today, Accountants Minute podcast presented by ESS BIZTOOLS, building future-ready advisory firms. I'm joined today by Andrew Geddes, joint founder of the Financial Management Research Centre. Gee, that was a long time ago, Andrew.
It was, Pete.
And chair for 10 years of Greencross Ltd and an accounting industry coach and mentor. And we look forward to going through this process today with Andrew, and Mr. Geddes is now on the screen. So,
hello everyone.
Welcome, Andrew. I know you've been on an aeroplane coming back from Adelaide today, so thank you very much for joining us.
You're welcome.
We'll just start going through our podcast. I presented a webinar yesterday, Andrew, giving an overview of some of the situations, but I'm keen to get your thoughts on where the industry is at present, given that 3 years ago, Monday actually, the then tax commissioner at Xerocon 2022, Chris Jordan, made some pretty tough predictions about where accountants and bookkeepers were headed. I've asked some accountants and they're telling me they haven't really noticed much change. So do you think there's been changes following the then Commissioner's comments about the brilliant and trusted advisors?
Peter, I think most of the accounting firms I know are still, particularly the smaller ones, not the big four or the group below that. I think a lot of the smaller independent ones are still very much involved in doing compliance work. Yes, there may have been some efficiencies through the software that they use, the accounting packages, and the ATO's digitalisation, but they're still very much compliance factories, most of them. And I don't see that the ATO has really revolutionised the way it does business with us at this stage. People are still preparing quarterly BASs and then, annual accounts and sets of and returns and submitting them. It may be done digitally, but that's still the focus of the work they do.
I rang one of our subscribers a couple of hours ago, and his comments were, hasn't really changed anything.
Yes.
There's more data matching going on, he said. His observation is the main mission at present by the tax officers on debt recovery, and that's what they seem to be concentrating on, and that's probably at the urging of the Federal Treasurer, I imagine.
Yes.
And he did make a comment that assessments that were under $100 that were written off 6 or 7 years ago, I really didn't know that it occurred, but anyhow, they're now chasing them, and there's a figure of $10 billion being talked about as to what that $100 assessments that haven't been paid, were forgotten about, could amount to. So that's a lot of money.
Indeed it is. And look, a lot of small businesses are in trouble. There's been a record number of insolvencies.
Yeah.
And I know one of the companies I work with, we're paying a debt off to the ATO because our cash flow has been squeezed by difficult economic conditions. And that's part of what we've had to do to save ourselves. Yes, the message from the Commissioner about you're going to have no compliance work to do, I think was an overstatement of that. Well, let's say if that was his expectation, they certainly haven't delivered. There's still a hell of a lot of compliance work that has to be done. However, if you want to move out of being compliance only, you've got to understand small business and be able to deliver value to the owners of those small businesses. And it's a very different advisory game from doing compliance return work.
Yes, and within ESS BIZTOOLS, that's what we're trying to inform practitioners about.
Yes.
That it is different. They need to have a more of an in-depth knowledge. And in fact, I've copied the term that we heard from our American colleague a few years ago of knowing the client 1 inch wide but a mile deep. I think is very important.
Yes. Well, if a client's going to pay you money for an advisory relationship, you've got to be able to deliver value to that client. Otherwise, they're not going to pay you for very long. And the problem with the accounting profession is that they've been paying us to do compliance work that's forced on them by the government, the ATO, in its tax gathering exercises. So you've got a hurdle to break down. As I tried to illustrate in the PowerPoints I sent you, I think there's a 4-step process that's very simple in helping an SME client understand the value you can bring. I mean, to me, the starting point is helping them set some targets and goals. So if you've got an existing business, you can simply look at what's been the revenue, expenses and profit for the last couple of years, and what do you think that's going to be this year? And you can create a break-even target. So what wages and salaries we've got to cover, what overheads, plus what profit do we want, equals a revenue target. And if if that's 1.2 million divided by 12, it's 100 grand a month. There's a start. So from there, you could break that down into the units of that business, be it number of electrical installations or number of hours or number of clinical visits to the vet, or whatever number of fridges sold. So I think if the accountant can help a client break it down into weekly targets and get them focused on their sales efforts and their sales team, and understand, where are your leads coming from? Are they coming from the internet, or are they coming from old-fashioned advertising? Is it based on people visiting them, or is it referrals from existing customers? Where's your business coming from? And what might we do to begin to improve that? So having set some goals and targets, we then start to look at the second step is, how do we improve our revenue? How do we improve our pricing? How do we get our sales team operating better? Now, that's foreign language for most accountants. Some understand it. I have put myself through a number of certificates and online courses in value pricing, 3 options proposals, analysing your customer base and working out ABCD, where is the profit actually made, which clients are costing us, getting rid of them or pricing them up so that the ones that remain at least make money. So an accountant can help with target setting. Then we can start looking at strategies to improve the business. And it's usually around a more focused sales effort to the clients that are the most profitable, those type of clients, and then pricing up the business. Then the third thing that accountants can help in terms of value, I mean, out of that comes, does the client have a daily stand-up with their salespeople? Do they have a weekly sales review? Do you have a monthly financial review? And the accountant could participate in that. I'm not suggesting that many of them have the capability to be a sales coach. In my environmental engineering business, we took a government grant, brought a sales coaching team in, and the sales coach worked one-on-one with our 7 salespeople on a weekly basis over 6 months, and made a huge difference to what happened. So that's not an accountant doing it, that's a specialist sales coach. So let's step 1, set some goals and targets and break it into weekly targets. Step 2, let's think about how do we improve our sales, our pricing, control our costs, improve our cash, and that might be through stock management, debtor, WIP management, more regular billing, debtor management, and the accountant can help with that. So strategies to improve profit and cash flow. And the third area is then, helping them with risk management. Pete, what happens if you get sick and you can't work or you die? What happens to your business, your family? Have you got insurances, income replacement insurances? Have you got shareholders agreements? The accountant can help de-risk the business, again, with the small business owner, as long as that business can afford it. some of the micro businesses can't afford this. So it goes back to, you got to, why do you try and sell things to people who really can't afford? You got to go to look at your client base and go where you think there's some receptivity. So risk management. And the final thing is then go back to the, step 4 is strategies 102. You've done the looking at monthly and weekly target setting and cash management. Now let's look at the longer term. What's the business? What's the value of the business now? What do we have to do to improve it, make it more saleable? Improving profitability and cash flow will increase the value of the business, but also making the owner dispensable. So has he or she created a senior leadership team? Are they delegating some of the things they do and teaching others to do it? Have they had a 2-week holiday and the business has had to run by itself? These are simple advisory questions and conversations with clients. It's a 4-step process. It's very simple. If you're going to be an advisor, you've got to be able to engage your client in these conversations and prove that you can deliver value. So if you've got an accounting firm that's busy with compliance work, someone has to have time to do this. And if that's the principal, that's fine, but they have to have a team that then takes over the total compliance. So you can apply the same thinking to an accounting practice. If we can create a compliance production group that works with the clients and gets the data in and can produce all these things, then that allows an advisor to have these conversations with clients, attend regular meetings, and suggest to them in their own options pricing, compliance costs $5,000, but for $15,000, I will come in and run these meetings with you regularly. So I don't see the profession having changed a lot. There are some people who are good at what I've just talked about, but they're a minority. The majority still seem to be well and truly compliance factories. The more experienced, bigger practices and the practitioners who I've worked with for 20, 30, 40 years, yes, they've been able to create teams and delegate the compliance production, and they've shown they can create value, and they become external CFOs, or they sit on the board of advice with their bigger clients. And so some of them have certainly achieved this. But, for people to say, oh, their profession is now advisory focused, it's not what I observe. Sorry, blunt, isn't it? But that's what I see. So how do they get good at those 4 steps? Buy ESS BIZTOOLS, read the information, do some online training, and just try and find a receptive client who says yes and start to do it. The best way to do it is learn it. I'm sitting
you don't have to do 20 clients right from the start, do you?
No. I mean, I'm sitting here at 74. I've got 7 clients and I earn $300,000 a year from them. There's a specialist business advisor. And I work half time doing it. But they don't want me to retire. They get great value from my involvement with them. So that's what's possible. I guess what I'm trying to illustrate is sometimes you've got to let go your huge number of compliance clients in order to develop a smaller number of advisory clients, and you need to pick the ones that can afford you.
Yes, and last week I come across some articles in Accountant's Daily that were written by an ex-Deloitte partner called I've got his name here somewhere, Eddie Senator. Sorry, Eddie Senator. My apologies to Eddie. And he's written a number of articles in Accountant's Daily in recent weeks, I've noticed. And was a liquidator with Deloitte.
Yep.
And he's looked at what accountants are doing. He's really challenged whether accountants are entitled to the trusted advisor status.
Yes. Well, I guess I have too. Yeah.
Yes, and so have I. There's not enough digging into what's going on in the business. He makes the comment, just slow down a bit. I think I'm putting in my words now, slow down a bit. It all hasn't got to get done in one day, but get to know exactly what you just said. Get to know the client, understand the business, this 1 mile deep concept.
Well, for example, I've just been in Adelaide and I've been with, one of my clients who happens to be an accounting firm. We've established a budget for this financial year. We've broken it down into monthly targets. We've split it into 4 different specialist teams who do different things. There's compliance accounting, there's audit, there's superannuation, and we do some specialist external CFO work, often coming out of our audit, because there's a lot of organisations that need help with that, and that is looking at their accounting systems, putting in better systems, training their bookkeepers, and then they run it themselves. So we've spent time establishing our targets and breaking it into the divisions and breaking it into monthly targets. What we then do is we have a formal review of that with the heads of each of those sections once a month. I have a separate hour with the managing partner once a month, just talking about how's it going, what's happening. We've got 3 business improvement projects, one associated with the use of AI, and a couple of others around the development of people and an offshore team. So I talked to the MD about, how are our business improvement projects going. Then that's a separate, it's a one-on-one sounding board. So there's, apart from the establishment of the goals and the budgets, then there's a pattern of meetings where I'm talking to the MD, I'm participating in section meetings and the board meeting once a month. And then every 6 months, we strategically review it and run a whole team training day. So when you do that, you can charge a client 30, 40, 50 grand, particularly, they need to be able to afford that, but you're delivering value, and then you don't need too many clients to make a good living. So I agree with what he's saying. You've got to get more deep. I'm a tribal member. Some of these clients I've worked with for over 40 years. And I've been part of their, I've helped them create a senior leadership group. I've helped them retire partners, bring new partners in. They're either engineers or surveyors and spatial specialists, or they're a couple of accounting financial services practices, audit practices. So they're all multidisciplinary professional service firms. That's the other lesson. I've specialised in certain sectors, and they're all similar, so I cross-fertilise them. So some accountants, to get into advisory, if you've got a really good electrical contractor and you get this relationship with that business, perhaps then you can go to the annual conference with that man and his wife, and perhaps you can get to know some others, and all of a sudden you might have half a dozen of them in a sector, and you look at what the good ones do and cross-fertilise them, and suddenly you get a reputation as being a specialist in that area.
That's right.
So again, that's another mile-deep concept that is focused on an industry-specific target. And again, use the ESS BIZTOOLS information to learn about how to do business plans and how to, do various pricing analyses and how to help them. If you're going to be a good advisor, you've got to learn. So you've got to study, and then you've got to get out there and put it and practice in the field.
That's right.
And as he said, one at a time. You don't, to think you're going to have 50 clients in 3 months all doing this.
I think a lot of the problem is that initial conversation with the client. And you recall in your FMRC days, you had a needs analysis.
Yes.
And with your support over the years, we changed that slightly to an SME needs analysis.
Yep.
And we've got 3 variations of it, but it's
Yes.
really trying to give accountants some dot points that they can raise with the client.
It's
Are
an
you happy
agenda
with
for
the
a
gross
discussion.
profit percentage? Are you?
Peter, you could table either of those 3 versions with a client and use it as an agenda for a discussion and just work your way through it.
Yep.
And so hence you've got a guide to, I think before you go into a meeting, you should think, what's the purpose of the meeting? What is the outcome I'm trying to achieve? What is the outcome that the other participants want, your client wants? Are they prepared? Have I given them data analysis things to look at or read? I see people running into meetings and they're not prepared. They haven't prepared the client, and psychologically they're not prepared themselves. What sort of personality am I dealing with? Do I need to adjust the way I operate because of who I'm coming in to work with? Some people like detail, some like action and are impatient. Others just want you to be a sounding board and to ask, listen, and shut up. And often them talking and articulating their pressure points gives them a clarity and an insight that they find useful.
Yeah, very interesting. One of the interesting figures that came out of the QuickBooks survey, Intuit and QuickBooks,
Yep.
on accountancy firms, where they had 400 accountants and 500 business operators in the pool, was that only 15% of those businesses, so that's 60 businesses out of 400, in fact, would have been, there was 500, yeah, 75 out of 500 gave the accountants a key strategic partner rating.
Yeah, because they're focused on compliance,
Yes.
which the ATO makes us do. And they're so busy they often send stuff out for signing and then they lodge it and they don't have a conversation with the client. So that's what I mean by a compliance production factory. That's its focus. To become an advisor, you've then got to change the nature of what you do. But a lot of accountants build the team and delegate that to the team, and then they have a higher level advisory role with a handful of their clients, and they evolve into this over time, and they learn, in running their own practices, they learn commercial experience, how to deal with the landlords, how to deal with software suppliers, how to deal with banks and financing, etc., etc. Employing people and de-employing people.
Yes.
Performance managing people, all of these HR skills. So as you do it yourself, you become experienced and hence more valuable to your client because you can share those experiences with them. So people evolve into more of a advisory role with a handful of their better clients as time goes on. The ones that don't do this, they have not enough, they don't have enough team resource, hence they're the compliance production person, and they got no time for anything else. And by the time 8 o'clock comes, well, often they go home, have tea, and then start working it from home at night. And they're so buggered at the end of it that how can you be an advisor when you're exhausted? You need to bring energy to the meeting and the relationship.
Very important.
Yes.
And I think this overall problem of this concentration on taxation is borne out by the average fee, according to the QuickBooks report. 74% of the businesses were paying less than $5,000 per annum for accounting advice.
Yes. Well, in one of my accounting firms, we did an ABCD analysis of clients. The A clients were above 50 grand, and there were about 15 of them. And they had we were earning above our average yield, so that there was some value pricing. The B clients, who were in the category of about 20 to 50, that's where our profit really was. We were earning really good, double our target yield in there. And then the C clients, of which there were thousands, were running at a under recovery below the yield we wanted. So that was a loss area. But all of the senior client advisors felt connected to those people and didn't want to raise the prices because they felt they couldn't afford them. So they'd made the decision to write jobs off because they just felt they should be servicing them. Now, the question is, if you doubled your fees, we'd bring it into a profitable situation, but we might lose 30, 40% of those clients. But once they're paying more, some of them will go, I just want a compliance service. I'm not prepared to pay 10 grand. I know I can get it done for 5, but they're not receptive to advisory. So if that's what's clogging you, you've got to make a decision. Quite often firms will use pricing to try and shake out the lower compliance only clients because they struggle to get a resource. So sometimes by having less clients and a deeper relationship with them, it's easier. You've got less production to do, but there's more time for the advisory, which you can sell at double. You'll get a higher yield on that work. So again, you've got to make a decision about how many clients, what type of relationship, what type of work, and often the resourcing that you can get. Why have a lot of Australian firms created teams in the Philippines and in India? Because they can't get enough staff in Australia. They're not prepared to, they've got to pay them too much due to the industrial relations changes here and the difficulties in unhiring people who don't develop.
Yes, it's a a big issue, and there's people in the Philippines really chasing that work now. I've noticed.
Yes.
I've had a couple of approaches in the last couple of weeks by people who had been attracted to ESS BizTools because of our marketing. But when
Yes.
I spoke to them, they were really wanting to outsource services out of the
Yes.
Philippines, and gave me an overview of the team they were putting together. And so one of them in particular was looking at a multifaceted business. It wasn't just going to be for accountants as such. They had web designers and
Yes,
marketing people involved in the group.
Yep. And personal assistants,
Mm.
Support specialists, administrators, secretarial type support. Yes. So when you look at the difficulty of doing business in Australia, given the current economic conditions that are being imposed on us by state and federal governments, there's record numbers of small business bankruptcies. It's a difficult time. I know a number of accounting firms who have just their advisors in Australia, and all of their compliance team is based overseas because of those difficulties. So again, it would be interesting to see what percentage of the total accounting fee that's charged is the production's being done overseas. It's an increasing number all the time. Yes,
I noticed in this survey done by Intuit QuickBooks, that question was obviously not asked.
No.
Because there's no. I read it very carefully on the weekend to try to determine if they had any figures or percentages to indicate how much was being outsourced, but it was not mentioned.
Yes, I don't know. I'm just voicing an intuitive feel that it's an ever increasing percentage, and it'll be a lot higher than people realise.
Yeah.
However, again, some of your young accountants who are happy to do compliance but want to be more advisory, it's a matter of slowly but surely creating that relationship with clients. As I said, set goals and targets, then do strategy 101 with them and look at ways to improve that, and then put the risk management structure in place. And then strategy 102 is how do we increase the value? And that's a simple way of creating a relationship where you meet regularly and get involved in the senior leadership team as a guide to the setting of budgets and targets and their monitoring, because you can help improve the system and the accounting system and bookkeeping and the reporting of those results, and slowly but surely develop those relationships. So a lot of the kids, why are they not studying accounting so much anymore? There are less students studying accounting. Why is this happening? Because they're seeing it as in an office on a laptop doing compliance work, whereas if they were also having to go out and do some processing at clients' places and being involved in some of the advisory meetings and slowly but surely being given responsibility for producing some of the reports that go into those advisory meetings and or chairing them, you've got a very different type of job and future that is more aspiring.
That's right.
So again, it's how we treat our team members. If you just want processes, well, you're going to struggle to get them and you might have to go overseas. But if you can look at developing your young people into more of an advisory using technology, accounting software and other industry-specific pieces of software. I know a firm that specialises in hospitality, and some of their mid-range accountants are very good at going out and putting in stock management programs and security programs at point of sale, that sort of thing, in restaurants, bars, clubs, etc. So there's an example.
Yeah. One of the side issues that's I've become aware of in the last couple of months is we've been doing some marketing, promoting ESS BizTools services to accountants, and we've had inquiries from people who are accountants. A number of them were born overseas. Most of them have had some education in Australia, but not all. Some had their education overseas. A and in the main, the ones I'm thinking about now, and there's about 30 of them on our list so far, who have worked in larger corporations, not in accounting firms,
Yep.
but are now have come to Australia and have tried to get employment in an accounting firm and run into the problem they know nothing about the Australian tax system.
Yeah.
So one of them said to me, well, can't you help us? And I said, well, if we put together a course that you had to pay for, and where there was exams at every segment on the internet, that would train you on advisory services, because these people, I had an understanding of business. They understand how businesses
Yes.
operate because they've worked
Yep.
in larger corporations.
Yes.
If you do that and you pass it, I will promote to accounting firms in Australia that we've got people that have reached that level of understanding, because I suspect some of these firms are going to be looking to put in more specialist teams to do advisory. The
Yep.
people who are dyed in the wool just to do compliance probably want to stay doing that, but hopefully there's a realisation they do need to be offering a range of advisory services.
Yes, well, indeed. And again, it's around that 4-step process I was talking about of target setting, looking to improve profitability and cash flow, liquidity, and then de-risking the business, and then strategically looking at how can we improve the business. So if they've got commercial experience, there's, the thing is, will an accounting firm employ someone on a high salary? They've got to be able to generate revenue, and the clients have got to be willing to see the value in the advisory input, which, as you said earlier, they see accountants not in a strategic advisory role because they've been compliance focused. So it's a bit of a catch 22. Some of those people should do the training you're talking about and possibly promote themselves as business coaches.
Yes, it's an observation that I hadn't really thought about until very recently, because, as I said, there's at least 30 of them who have been saying to me, well, we want to get into it, but we're having trouble. And they're doing other jobs which they think they're overqualified for, but that's what they're doing.
Yep. Well, I think you could easily do it using the framework that I sent you in my PowerPoint slides.
Yeah, my apology, Andrew. I've been out all morning and I never saw that you'd sent that.
It's all right. We don't need to look at them. It's just what I've been talking about.
Okay.
Step 1, set some targets. Step 2, look at how you help improve, revenue, pricing, margins, liquidity. And step 3, de-risk it. Step 4, then strategically improve the business. That's all you've got to do. Then the clients go, okay, there's value in the relationship. And a lot of what's content in your ESS BIZTOOLS can help people do just that. Some of these 30 people who've been talking to you, they can't get jobs in accounting firms. I wonder if they could use their family and or relationship connections and go to businesses and say, we can help you with that 4-step process. And market themselves.
Yep. Interesting. Yeah, it's an area I'm going to do a bit more work on in the next few weeks. Incidentally, in the QuickBooks report, they did identify some of the advisory services that some of the accountants were doing that were part of the survey. And I've gone through and analysed what they identified, and I think ESS BIZTOOLS covers those areas very easily, but it only represents about 1/3 of the content within ESS BIZTOOLS, because no one really identified areas like research and development, which is very important, and a lot of SMEs get involved in it.
Yes.
Or raising capital.
I've come into a firm that is a specialist grant researcher and provider.
Right.
So there's someone who's specialised in that. So it just shows you can go to an area, or raising capital. That there's a number of firms that are doing that in different ways. So again, pick an area, learn it well, get a few clients, and then reputations.
Yeah.
Excuse me 1 minute. I've just got a man who wants to, my back fence got washed away. I need a new fence. And I've got 2 little boys who live next door, and there's rusty nails and crap everywhere. So he wants to come and have a look and do a quote. So I might have to head off shortly, Pete.
Yeah, well, I think we're just about there, Andrew. I just wanted to finish on one point. In the material that was published under the name of Eddie Senator in the Accountants Daily about a week ago, he said, one way to test whether accountants are in fact trusted advisors is to ask clients whether they would still have a relationship if end of the year tax work through some stroke of magic wasn't required by the tax office.
Yes, that's a very blunt way of putting up what we've been talking about. So again, the accountants who've been doing it for quite a while do have deeper relationships with their better clients, and they are more commercial. I know a few who've let some of their compliance work go because they couldn't get staff, and they didn't want to go through the challenge of creating an offshore team. And they've actually dropped their revenues, they've dropped their number of clients, and they're more profitable than they used to be.
And they're doing advisory work.
Yes.
Yeah. Yeah.
Well, I'm an example of that. I don't do any compliance work. I just do advisory work. But I'm at the end of a long career.
Yes. Yes. We both are.
Yes.
Incidentally, I talked to a young guy recently, anyone in their early 30s is young to me these days.
Yeah.
And he's had some interesting experience as an accountant, but he's now running a firm where he's got 3 companies with turnovers ranging from 7 million up to 25 million, I think it was.
Yep.
He works about a day a week for each of those.
Yes.
The other 2 days, he does a little bit of tax work, and he's got a couple of smaller things.
Yep.
But he reckons that his fee income is 70% advisory, 30% compliance.
Yes. And he'd be high margin. His net percentage would be high.
Very high.
Yeah.
So, Andrew, thank you very much for joining us today.
Peter, look, it's a pleasure to talk to
giving us
you
the
always.
benefit of your input.
Yep. It's nice to see you, and we're still out there kicking goals, and it's look, compliance is needed, and advisory work is also needed. It just requires a different approach and a change of focus and skill sets. Yes,
that's right.
Anyway, mate, good to see you. Best of luck.
Great to see you. Hope you get your fence fixed.
Well, we have to. I'm concerned one of these little boys might get impaled on one of the rusty nails because they're 3 and 5 and they're like hurricanes.
Future rugby players, eh?
Indeed. Okay, mate.
Okay.
Cheers.
Thank you. Goodbye.
Bye.